The demand part of the story, the supply part of the story as well, though. Activist investors like Carl Icahn, Nelson Peltz, and Bill Ackman take a vocal approach when pushing for change, whether it's an energy company or any other. My next guest, though, prefers a different method while steering companies in new directions. He runs a hedge fund that recently made a $100 million public investment in a chemicals company, Ashland. Daniel Lawrence is with us this morning, Elmrox Investment Group founder, joining us right now. Good to see you, Dan. Thanks so much for joining us.
Thanks for having me.
First, let me get your reaction to this move in oil. Is that what has stabilized stocks these last couple of weeks, do you think, the fact that commodities have begun to move up?
Well, a number of factors seem to be helping risk assets, but I would say that's one of them. But as oil relates to Ashland, for example, it has two businesses, Valvoline, which is a best-in-class consumer business. It's a very big beneficiary of lower oil prices. So even in this recent move will really help its business.
Michael, do you buy it, the oil move?
Yeah, I'm not a big believer in the oil move, but, you know, when we were in the low 30s...
You would sell it. You would sell this.
I'd sell it eventually. You know, everything, again, I keep saying time and price, and that's how I feel here. Everyone's getting very excited at getting back on board with oil. I do think that we're kind of stuck here. I think at $40, I compare it to the carnival game Whack-A-Mole, where suddenly all the producers that are starved for revenue are going to come out and start whacking supply, whether that's on a global scale or anything else. You know, how that impacts Valvoline. You know, Valvoline, like you said, is a world-class brand that can certainly, you know, hold its own. World-class brands are going to do well, and financially stable companies are going to do well here. But that's where I am on this. You know, what I'll say is, you know, within the chemical industry, though, we are seeing this consolidation, this massive deal with DuPont and Dow. Do you see more of that coming for companies, maybe not Ashland specifically, but other companies in that space? More consolidation, more teaming up for strength?
We do, and that's actually what we're advocating. So, like you said at the outset, we're one of the largest shareholders of Ashland, which has two businesses, a best-in-class consumer business in Valvoline and a best-in-class specialty ingredients business, which is one of the best chemical companies in the world. And we believe that the assets are not housed in an optimal structure. So what we're advocating, which is in a public presentation that the Wall Street Journal featured in January and is also available in SumZero, is to actually sell the specialty chemicals business today as a way to realize that significant valuation disconnect between the public markets and what the intrinsic value of the business is.
Without getting specific, if you can't, or
no, get specific. We like
well, fine. But
we'd like to make you feel a little uncomfortable.
Well, what sort of buyers would there be for the specialty business?
Well, there's probably a number of financial and strategic buyers. If you look at people who have a long history in chemicals, I mean, even Dow and DuPont, which are clearly busy right now with their own deal, would be likely buyers. The thing about Ashland's specialty chemical business is it's one of the best businesses because it has durable competitive advantage and sustainable moats. If you look at a number of European players, BASF has been spoken about in the press, and there's a number of private equity firms who have a long history in being involved in chemicals as well.
So is the confidence out there for somebody to make a move like that? Because you do have to have confidence if you're a business operator or a private equity investor in the road ahead, in that business and even in the overall economy.
Yes, I definitely believe it is. And the attraction of Ashland's chemical business, and this is one of the major misperceptions in the street, is that it's a lot more cyclical than it really is. I mean, chemical businesses, by their very nature, are cyclical enterprises, but only roughly 20% of Ashland's chemical business is cyclical. And the other key component is financing. And if you've seen the credit markets, specifically the levered loan and high-yield markets over the last few weeks have really been healing. So the credit would be available, we think, for a transaction as well.
How much is the impact of the cost of oil impact those businesses?
Well, the chemicals business, it doesn't impact much because the main input cost is cellulosics or plant-based raw materials. Valvoline purchases what's called Group 2 base oil, which is a derivative of crude oil. And as oil has fallen over the last few years, they've had a significant margin tailwind. But it's like Sherwin-Williams 15 years ago. As oil goes back up, they still have pricing power. So either way, oil going up back to 40 or staying low, it's a great tailwind for the business.
Do you think this stability that we've seen in markets is sustainable? I mean, how do you feel about where we are right now in terms of markets?
So we are single stock investors. For me to opine on the broader market,
it doesn't matter to you.
We're largely agnostic. I mean, we have a business that we think is very cheap, trading at roughly 8 times consensus EBITDA, when the underlying businesses should be at least 12 times or more. So we're very much focused on individual stocks.
All right, we'll leave it there. Danny, good to see you.
Thank you.
Thanks so much for joining us. Danny Lawrence there.
Thank you, guys.
New Jersey.